if there is any emergency news. Now we have understood in Forex, we trade different currencies now, but now we will understand which currencies we should focus on and why. Now, which are the major currencies? We have 8 major currencies. The 8 major currencies are those that are used the most. They are traded the most in the world, or they are not pegged or fixed with any other currency. For example, if you take the Saudi Riyal, you are taking the Emirates, UAE, Dubai Dirham. Now, why is there no reason to trade them? Because they are fixed, pegged to the dollar, and their rate will remain the same with the dollar. In any condition, they have agreements. So what is the disadvantage? What difference does it make that their difference does not come? If the market does not move, we cannot make a profit. So now we have to trade major currencies that have a lot of liquidity. Many people trade them, but the market also moves and their rates are not fixed, like China's yuan, where the government does special fixing. It should not be fixed. Due to this, when we look at all the conditions related to trading and eliminate them, we get 8 currencies. Number 1, we have the United States dollar, the US dollar. The dollar is the king of this market. We will discuss that further. Then we have the euro from the Eurozone. Then we have the Great British Pound of the UK, England. Then we have the Swiss franc, CHF of Switzerland. Then we have the Japanese yen, the Australian dollar, the New Zealand dollar, and the Canadian dollar. Now, these are the 8 major pairs that we need to focus on, which we need to trade. Now, they also have nicknames. Why is it important to understand the nicknames? Because when we are trading, people do not call them by their names. They call them by their nicknames. Now, for the dollar, it's Buck Benjamin, Greenback. For the euro, it's Fiber. The normal name for the Japanese yen is yen. For the Great British Pound, it's Cable, Quid. For the Canadian dollar, we have Loonie. For the Australian dollar, we have Aussie. For the New Zealand dollar, we have Kiwi. These different names that we get are to understand this trading language so that it becomes easy for traders to communicate with each other. So these are 8 major currencies. We have also discussed their names, and you can see the symbols on the slide. Now we have understood the types of currency. Now we have also found out which are the major currencies. Now we need to find out that trading is done in pairs. Trading is done in pairs. So now we need to see which pairs we have to trade. Now there are 3 types of pairs. First of all, the ones we should focus on are called major pairs. Now, what is a major pair? Now, we understood that there are 8 major currencies. All right? Those 8 major currencies. Whenever we trade against the dollar, that will become a major pair. It will become a major pair. For example, we have the Canadian dollar. We traded with USD. This is a major pair. Yen USD. JPY traded. This is a major pair. Euro USD traded. Major pair. Similarly, Pound USD traded. USD, CHF, USD, NZD, USD, we will do. These are all the major pairs. Then after that, we have cross-currency pairs, which we also call minor pairs in another language. Now, minor is whenever we trade a currency, a normal currency that we have, other than the dollar, which is a major currency, whenever we trade it against another major currency, not including the dollar, but besides the dollar, we have 8 major total currency pairs. Besides the dollar, we have 7. When we trade the 7 against each other, that will become a minor pair. We will say that I traded on the cross, traded a minor pair. Then last but not least, we also have exotic currency pairs. Now exotic currency pairs. What happens when we trade any major against that emerging market currency, which is not included in the 8 majors? In that, we have the most famous one, USD, INR, Indian rupees. We have a USD Mexican peso. Those are quite popular nowadays. Then we have a USD and Turkish lira. In the same way as we expand, we have a lot of exotic pairs. Let me tell you that we have the tradable currency in the world is 1. Among these, the electronic tradable currency is all this one. Okay, we have to focus on those 7 ones. Among those 7, we understood that the main major is, and the biggest king in the major is the dollar. And after the top $10, all minors come, and then the rest of the exotic pairs follow. Now, why should we trade major pairs? For a simple reason. We discussed earlier that they are highly liquid and frequent. In this, we get trading opportunities repeatedly, and the transaction cost is very low. Now, the downside in exotic pairs is that they are greatly affected by economic and geopolitical news. For example, if news comes out about Turkey, like sanctions being imposed on Turkey, now nothing happened, just the amount of news. Turkey will start to crash, Pakistani rupees will start to crash, Indian rupees will start to crash. Due to any news, some issue arose at the India-Pakistan border. A problem arose with China. It will start to crash because that is not very liquid. Because we discussed earlier why we do Forex. There are a lot of liquidity participants, market participants. So when the pair is small, this defect is found in exotic pairs, similar to what is found in stocks and crypto, that participants and liquidity are low, so they crash quickly on news. And when we trade it, the transaction cost, whether bank or selling, which we have to pay regardless of profit or loss, is higher as compared to major pairs. So that is why we will be focusing on the major pairs.